And that sounds means we are now live here on our YouTube channel, Tackle Trading's Halftime Report. It is Tuesday, 12/29, 2020. And we're here to put on a great show for you guys today. Have some fun, talk markets on a light news week in terms of market news, company news, corporate news, although we've got some stimulus news we're going to break down. Got a full crew here today to join me. We've got Coach Mark doing analysis as always. We've got Coach Emily Mururi joining us today, the queen from Women in Trading here to talk about markets and the way she's approaching them right now. Coach Cody Mackey is running screens, doing some technical analysis for me. And we've got Tanyan on the back end doing producing and hosting. Welcome out, everybody. Let's start with Mark. Mark, how you doing today, sir?
It is cold as can be here in Utah. I got like 6 layers of clothes on just to protect myself. But hey, listen, remains a great cash flow environment. I know people get tired of me saying that, but it does. It does. And I don't think $2,000 stimulus checks are going to hurt that very much. But we'll talk about that more.
I think I could cash flow off of every time he says cash flow environment. Like one of those, if I had a nickel for every time, if I had a nickel for every time, I could cash flow off Mark saying cash flow environment.
Mm-hmm. Cash flow environment is what it is, though. So, and Mark's been making money in nickels on that phrase and also those market conditions. So I got no problem with it. By the way, it is cold. I was freezing last night, tucked up in my covers. I woke up this morning bright and early. And unbeknownst to me, there might have been some very big creature in my front yard.
You got to share that. I'm sorry. It's too good a story.
It is.
Somebody bring the screen down for 1 second here, Cody.
All right.
Somebody, and all I have is my phone. Okay, halftime crew. What kind of paw print is that? See, I laid the $5 bill down for comparison, but it's bigger than the one paw print. Now, that was only one paw print. I also took another one, which is a smaller paw print than the 5. So it's not necessarily bigger paws than the 5. So to give you context, but there were reports, Emily, I live on 34th and 117, and there was a report of a mountain lion in my neighborhood on 31 and like 114. So give you an idea, 6 blocks away, a Ring doorbell cam caught.
Listen, I'm sorry.
Last night.
Tim, it was not a mountain lion. It was a robot trying to find you.
Oh, that's even worse for Tim.
Oh, the robot dogs?
Robot dogs were there to get you, bro.
Somebody tell me if those Boston Scientific robot dogs make prints like that. I'll be terrified. Oh, no. We don't know what it is, but I also do know my oldest daughter who, has got a new little puppy. We got it for Christmas. She took the puppy out this morning to get in the car and then go for a run. And she says she heard something, a hiss-like thing, and she also says her puppy got scared. Now, I wasn't there. This is all conjecture. It's like a big story right now at my house, but yeah, that's what I woke up to this morning, Mark.
Wolves up there in Utah?
We got coyotes, not really wolves the
Coyotes
way you're thinking.
Wolves are bigger.
Yeah, no, wolves, I'm thinking wolves you're thinking would be more like Wyoming, some in Idaho and in Montana. So not where I'm at in Utah, not necessarily, but dude, I don't know. It is what it is. So it woke us up pretty fast here this morning, Emily. I got to tell you, we're all out in the neighborhood looking at these paw prints. We're all talking. It's quite a scene. Let's get to markets, though. I don't know what it is. If anybody out there literally is an expert in animals that could take a look at that paw, I'll even send you the picture. You can tell me what you think it is. But let's talk stocks here, on a Tuesday. Start with the technicals. Cody, what are you seeing chart-wise?
I'm seeing it hesitate after it tried to break out yesterday is what I'm saying. So this to me does not look like anything serious. One red candle doesn't change the pattern. The overall pattern is still a high base looking to break out. We did break out. We did close above the all-time highs. We continue to move higher today, and then we're pulling back from that. One candle does not change the overall trend. I'm still seeing the market breaking out. We have a hesitation candle today, which means we can take it the day off. We don't have to worry. Like, this is just the market's going to move. What do you do today?
Well, there's not really a lot of selling catalyst. Even this whole thing with the stimulus, we're going to talk about it right now. Obviously, the markets are tired. Mark, you used that phrase when we started our conversation. The markets are tired.
The market, there's that great technical phrase, right? The markets are tired. but they feel tired. They feel tired right now. That's not necessarily bearish. And listen, let's cut to the chase. All right. We're probably going to get $2,000 stimulus checks passed. It passed the House. Trump has been championing it. And who was the senator that just tweeted? Somebody just tweeted that we got the votes in the Senate. Chuck Grassley. I believe it was Chuck Grassley that just tweeted
Grassley did that? Okay.
All right. So, one of the things I've been talking about with pro members on our Sunday night prep class is that there hasn't been a bullish theme. There hasn't been a bullish theme. There hasn't been a bullish theme. While this isn't a forever bullish theme, that is a lot of money inserted into the economy. And if that gets passed, what you could have is a domino effect. Goldman Sachs has already upped their first quarter GDP to 5% on the backs of the $900 trillion stimulus. That would be a 5% GDP number. You could have this spiraling effect of $2,000 stimulus checks pass. People start upping their GDP. People stop upping their earnings. It starts getting people excited. It actually could develop into a short-term theme. We've been lacking one for a while in this run-up. The Fed have your back, stocks only go up. These are constants. They're not really themes. They're just constants in the market, in today's market game theory. Mm-hmm. $2,000 stimulus checks on the backs of the $900 trillion pass. That's a lot of money. It could have this domino effect of people upgrading GDP, people upgrading earnings. It will trickle into the real economy. Now, listen, fiat currency is garbage and this will all come crashing down one day. But in the short term, our job as traders is try to maximize the environment we're in. Now, this could actually serve as a legitimate thesis.
Here's some breaking news I got to cut in here, Mark, because Majority Leader Mitch McConnell just blocked an attempt by Schumer to get this bill passed. I don't know what that means that he blocked it. I don't know if that means that they cannot continue to push it through and get the votes. Mitch is coming out pretty strong and saying to at least to Schumer's attempt to try to call for a vote or whatever it is. McConnell is saying no. The headline is reading he blocked it and he's stopping that process right now.
Well, so. I mean, well, if that happens and they don't actually get a vote because McConnell just throws down the gauntlet, that's not good in the short term. It's not necessarily bad, right? We did get the stimulus bill package. It does take away that theme. And I'll go back to being a happy cash flow trader, knowing the Fed has my back and all of the other constant themes we have. So, some drama there. I mean, it's a big deal. I mean, that is a lot of extra money put into the economy from that bottom up perspective, from consumers in their pockets spending it. We know the American consumer loves to spend money. So, it's a big deal for that next leg up. Now, even if it doesn't pass, this is still a great pull out your nickel, Cody, cash flow environment.
Mm-hmm. There you go. Thank you, sir. I appreciate the money.
Yeah. Cody, go ahead and keep talking for a second. I'm reading through some of these details, trying to figure out exactly what is happening here with Mitch McConnell's actions. Just go ahead and talk.
Oh, so you need a good filibuster for bed. I got you. All right, let's filibuster through this market. I mean, I was on the lounge all morning, so I've been talking for the past hour and a half, but then again,
hey, where's your video, sir? I can't yell at Matt for not having their video, but I want to see you in that dark.
My video has that. See, the sunlight coming in, it just messes it up. So if I'm either in the light or I'm back.
The thing as a human being, you are able to adjust yourself. They have these things called blinds that that have been created.
No, it's a circle window. I can't.
You're such a handsome young man. You need to show the world your face.
He kind of looks like one of those mob informants that are under witness protection right now, like in the back. We could blur his face and.
Let me see if I can get that right. Just like.
Go ahead.
No. So what I heard. All right. Anyways, yeah. let's run through here. That was a nice long filibuster for Tim, even though I didn't actually say anything of importance. But what I can tell you is that the breakout potential on the other sectors looks the exact same as it did yesterday, whether it's the S&P, the Dow, the NASDAQ is up today. We are seeing some movement into the Dow. It's the only one that's actually still showing positive as of now. If my computer would ever load, scratch that. Just moved red as I clicked over to it.
This is why I not have his video down, by the way, Cody. Drop your video. His Wi-Fi is not great, so it'll help the speed of it. But you can yell at him without the video, Marky. Obviously.
That's fine.
you'll find your way. Go ahead, Mark. Go ahead, Cody.
I was just saying the NASDAQ, we are seeing some positive movement. Literally between me clicking over here where it was green till when it pulled up, it was red, given that nice fast Wi-Fi that I have here. Sarcastic, obviously. But the Russell is the one that's actually getting me, is when you have a hesitation day on the other sectors as they're breaking out, the Russell is actually showing a larger red candle. Now, this doesn't surprise me at all. Because of the move that it's had, the question is always, how long can it maintain this extremely aggressive bullish move? When you see movements like this, it's always hard to understand when it's going to stop or continue. And you play it as long as it continues, you continue to play it. And Mark in pre-production kept saying the same thing. He said the underbelly is getting beaten up. And we are absolutely seeing this right now in the Russell. So I'm going to throw this off to Mark. Mark, explain what you were kind of talking about in the pre-production. What do you mean by the underbelly is getting beaten up?
All right. So like internally, when I talk with team members, or even sometimes when I'm talking with community members, I mean, jargon's very important, right? That we all talk in the same language. When I use the term underbelly, I'm referring to everything that's not a blue chip. Right. So your blue chips, your S&P 500, your blue chip stocks, they're your blue chip stocks, your bigger companies, your large caps. When I talk about the underbelly, I'm not talking about Wells Fargo or Apple or Bank of America or, Boeing or anything like that. I'm talking about small caps. I'm talking about SPACs. I'm talking about IPOs. I'm talking about those fun little stocks that are off the radar, stuff that has had a really good December, right? So everything that's, and a lot of this stuff, the underbelly's had a great month, up huge, really run in this frothy environment. It's really, really struggled the last couple of days. And I don't know what the correlation is. Cody said something pre-production, people floating into big tech makes a lot of sense to me. People, putting their money into tech. We've seen, big tech have a good couple of days, right? A good little stretch for some of them, like Apple. We'll talk about Apple coming up here in a second. But the other layers of the market, what I call the underbelly of the market, it's had a really bad couple of days. Some brutal sell-offs in a lot of these areas. And so, once again, a lot of it is profit taking. A lot of it is just, you can't go up 1 billion% every week, every day. Eventually, there's a piper to be paid. Price readjust, you consolidate, you form a new pattern, and then you trade off that new pattern. But eventually, these strong trends in the underbelly were going to end. Some of them have started to break, I just, once again, small caps had a great run, right? They've had a really great run. I would look for consolidation here in the next little bit.
Mm-hmm.
Absolutely.
And real quick, just as you guys are talking, obviously I'm going through some of the detail of what McConnell's doing here. And I'm going to sum it up very simply. This is not a done situation. It is not a finalized situation. Bernie Sanders is threatening at some filibustering actions, obviously, if they cannot hold an up or down vote on the $2,000 direct payment. Here's a direct quote from Bernie Sanders. If we don't get an up or down vote to provide the working people of our country a $2,000 direct payment, that he's threatening to block the veto override mark that was going to go into effect in the new year and whatnot. Yeah. So there's a lot of working parts here. I'm going to have to think through this and talk to Matt about it, because there's a lot of stuff going on.
It's good politics too, because Sanders has some leverage here, because the House has overridden President Trump's veto on the defense spending bill, but the Senate hasn't yet. And so, I mean, there's a lot of politics at play here. It comes down to, can McConnell hold his coalition together if that's what he desires to do? Democrats are going to push for that 2,000. You have some Republicans. It's great political theater. It's great political theater. So,
and by the way, upping it from $600 to 2,000 for all Americans, the way that they're proposing this, would add about $463 billion to this new bill. So that's kind of what we're looking at from a stimulus perspective. It's really interesting and ongoing. And I don't think it's a done deal by any stretch of imagination, like I've been talking about. As I'm watching the broad markets here.
So the skinny bill's putting on a little weight.
Yeah, putting on some Christmas holiday weight. That's right. Yeah, that's exactly right. That's exactly right. Too much eggnog, my friend. As I'm looking through these markets, obviously markets are kind of sleepy at the top on the top end. The Russell, like you guys were talking about there a bit, it is taking a little bit more profit, but it did have the biggest run. Kind of makes sense on a day where the market's kind of hesitating here. Emily, how are you approaching markets right now? Just strategically, it's a light week. I know that you're going to trade every year for the rest of your life, but not every day for the rest of your life. So how are you approaching markets these days?
Well, I kind of got on holiday mode last week, just before Christmas. So I kind of put on, like Mark said, I kind of put on my cash flow trades and really haven't done much this week other than what I put on last week. So I'm really taking a break out of trading. I'm not in my normal environment at home. I'm at my sister's. I've got, nieces and nephews and cousins and family here. So I'm not in that environment where I can sit down and focus the way I need to and run my daily routine. So I'm not going to try to force something where I know I'm not in an environment where I can actually do what I normally do. So this week I'm just kind of chilling out and I'm still in the markets. I'm just watching what's going on, but really not taking on any new trades this week at all.
Mm-hmm. Back on the S&P for 1 minute, I do want to do a multiple time frame analysis here today, Cody. Obviously, I mean, we're hesitating up here, but we had a breakout yesterday, Mark, and now it's kind of slowing down just a little bit, red candle. Cody, flash through the intraday as well as the weekly chart and kind of give me a read on all time frames if you can.
All right, if I'm going to do that, I'm actually going to start at the larger time frame on the weekly. So on the weekly, you can see that we did, break above that old level, that 3,400, which was the previous pivot. We then went neutral for a long time. Now we're pushing up to, 2,837, or I said 28, 3,800, 3,750 is really the big, large number when you look at the weekly to see if we can move past that. 38 would be the second break point on the weekly. We're seeing a little bit of slowing momentum, but we're above all the weekly moving averages. Moving back down to the daily, already described that, so I'm going to quickly just jump through this. We did have a breakout yesterday, little hesitation today, breaking down into the intraday chart. Intraday, we're actually running all the way back down to our breakout point. So you see right here at the cash open that we had a lot of volume come in, all selling. So the overall hesitation after the breakout yesterday, so we had that breakout, it moved up. We got the hesitation during the closed market hours where it slowly inched up as well as just went sideways, didn't really happen. As soon as the cash open happened, we got that big red candle on the first 15-minute chart. The second 15-minute chart was big red candle, little pause, breakdown again. So we had a bear flag or bear base waiting to break down that we saw on intraday, and as that happened, we are getting it. Now, this is intraday. Does this mean that we're moving bearish on the overall market? No, it does not. All it means is that today you are seeing the profit taking out of certain stocks within the index that are allowing for the index itself to break down in a very technical type manner. With that, I can go even smaller if you'd like me to, Tim.
No. Actually back it out to like an hourly, because I think it's really important to get a little bit of context on this intraday chart, because as it's coming down into this location, we're actually testing some old resistance zones, Mark, which, until they hold, they're not support until they hold, obviously, but there are some locations here, including rising hourly moving averages and whatnot, where there could be some catalyst for support. I don't want to get too worked up about the selling here this morning when we're only down about, what are we, 0.23%. So let's not
it's nothing.
Let's not overreact to it, obviously.
Worse on the intraday small time frames than it actually is.
Mm-hmm.
Like literally I moved to the daily. Today's a nothing day. It's nothing. But this is also why you should understand the difference of different time frame analysis between the weekly, the daily, the hourly, the 15-minute, because you can start to work yourself up as you see something moving on a intraday chart that doesn't actually matter.
Mm-hmm.
So it all depends as to where your time frames are is what you're working on.
Yeah,
so
if you micro focus too much, you can get a little bit, hyper analysis in, for sure. I agree with that. Yeah.
Absolutely.
But you got to respect it. We are selling since the cash open. We got a little bit of a mixed market here on a kind of a mixed day in general. Let's keep flashing through markets if we can. Next, let's go to crude oil. And let's talk about the commodity here. Obviously, you know, it's been bullish for the last month and a half or so, being, you know, having a really good trend developing. We were running towards that $50 mark. We had our prediction podcast yesterday. And by the way, a lot of us had very different predictions around the oil markets. Let's just start with the technical read here. Mark, is there anything here we should be paying attention to, moving average wise, support resistance, anything that you're seeing?
No, I mean, I want to be surprised if you consolidate a little bit. The next catalyst we're looking for in oil for upward trajectory is some kind of huge percentage of the population has been vaccinated, economy reopening, lockdowns over in Europe. We're looking for that. That will serve as the next catalyst. The last catalyst with vaccine, we got a good run out of that, didn't we? Probably looking for another catalyst before you can take another leg up in oil.
Yeah, no, I'm with you. And we are seeing some hesitation in the candlesticks here, Cody. That trajectory it was on was not going to be sustained. We knew that. And it is starting to lose a little bit of that. Violated a trend line, couple red candles from before. Short term, a little consolidation here. Cody, what are you seeing there?
I'm seeing a potential bull pennant, but as Mark said, that bull pennant's only going to confirm if we have some form of catalyst. It's that the overall market open theme or economy opens theme, let me correct myself there, of people getting back to work, travel increasing back to normal. But does anyone actually think that that's going to happen next month? 3 months from now?
No, we're all projecting it 6 months out. Yeah. I mean, it will start to pick up. Yeah, for sure. But not till 6 months.
So that's really going to determine the speed at which oil moves. Because I think that it's not only, and then the tertiary factor is, I mean, we're just talking about the U.S. economy and oil. When does the rest of the world start opening up? Is that in 6 months or is that in a year? Because 2 U.S. companies, 1 British company have created vaccines. We have 3 vaccines out. How long does it take it for those vaccines to become readily available around the world, not just in the Western countries, not just in the US, not just in the UK, not just in Europe? How long does it take for the distribution of the vaccines to reach countries around the world and we actually see an overall reopening of the world economy that would allow oil to run back up? That's the big question with oil.
Yeah. And there's a lot of speculation around that question, by the way. A lot of Wall Street analysts are trying to figure out exactly what that vaccine rollout is going to be in 2021. And depending on how smooth or what kind of bumps there are, and we expect bumps in the road here, guys, it's not going to be smooth sailing. That can delay some of that reopening theme for sure, Cody. And that will be the ongoing question in 2021. Let's keep moving through. Let's look at metals markets next. Gold, silver, those two grab my attention today. Actually, not silver, just gold. Just give a quick peek at gold and let's kind of update support, resistance, and kind of triggers if you can, Cody.
Gold is trying to, decide whether or not it wants to take this reversal type pattern, which is an inverted head and shoulders, and break the neckline to confirm out the technical pattern that we're seeing. It's there. If we look at this chart on a weekly chart, you could call this a very large bull flag pattern. So the question is using these 2 different time frame analysis, the head and shoulders on the daily and the bull flag on the weekly, are we going to get that trigger that could move gold further up? And of course, this is on a weekly chart, so that line is a very big line on a weekly chart. And are we going to have this happen? I, in addition to the technical analysis, do have a forever bullish bias on gold. I don't care what it's doing on what time frame, gold over time will go up, especially as we witness over and over every financial hawk in existence turning up dead in the corner, and every dove seems to be just taking their place. And you have hawks morphing into doves. And what I mean by this, for those of you that don't understand the difference, hawkish on monetary policy is the one that's like, you only spend exactly what you have. The budget's always perfectly balanced. Dovish are the ones that are like, more debt, add more money. We can grow our way out of it. Just print more money, give it out there. As you do that, and being dovish, that tends to destroy through inflation a fiat currency. As fiat currencies die, commodities gain value because they become worth more of the fiat currency. So gold being the number one hedge against fiat currencies, I will forever hold a bullish bias on gold because every single government, financial, whatever, just wants to print more money and kick the can down the road. And it doesn't matter what happens next year. And if we're going to print more money, well, we'll let the future people of America, our grandchildren's grandchildren, 200 years from now, worry about the consequences of this. Who cares? Print it now. I'm going to be dead in 50 years. Who cares? And that seems what they keep doing. So we will continue to see inflation of the fiat currencies, meaning that we will see an increase in long-term value of every single commodity, and gold is king. Cash is not king. Gold is king.
I love the analysis, young man. Is that your best Matt impression I'm hearing right there, Emily? Is that?
I heard Matt Justice.
I heard a little Matt in there.
I heard, yeah, it was Matt. I was definitely a lot of Matt.
I like it. I like it a lot, actually. And by the way, I love your lines that you've got here. That zone around the 1900 zone with the long-term kind of flag that's happening on the weekly, monthly type charts, I'm very excited about. And I believe somebody refute this. I think gold is easier to analyze on a weekly chart than it is a daily chart. You know, just because of the nature of the way that it trades, the nature of the way the trends work,
Absolutely,
all that kind of
100%.
stuff. Yeah.
Nope.
I mean, every once in a while, like, you know, in August, like when you had that parabolic move, or was it July? I don't remember when gold went crazy. It's better on the daily, but I mean, it is so much easier on the weekly. It is so much easier on the, you know, surprisingly, a lot of things are a lot easier on the weekly.
Yeah, smooths it out. Multiple time frame analysis is very, very important. And by the way, if you're out there watching the show right now, hashtag Team Tackle in the chat. The mountain lion got me distracted earlier. Emily, I forgot all my checklist. And just type that phrase in, multiple time frame analysis. Somebody in the chat, multiple time frame analysis. If you've not yet studied it, if you're not changing time frames on your chart, very, very important to do that. Kind of gives you a big picture of all the analysis. Let's keep flashing charts here, Cody. The dollar next, then Bitcoin. You give me a read on the dollar, should be pretty quick, I'm guessing, and then we'll go to Bitcoin. I'm gonna get Mark's read on Bitcoin.
I mean, the dollar literally was take everything I just said on gold and invert it. I pounded the table for commodities as to why they're better than fiat currencies. The dollar's a fiat currency. We're printing money. We're literally arguing whether or not we're going to inflate the U.S. dollar by 900 billion, or are we going to inflate the U.S. dollar by 101 trillion? It's all the same. We're arguing as to how much pain we want to put on the dollar. Dollar is bearish. A lot of the picks that I pointed out both on the Forex report and yesterday are working. So my Forex traders are happy. I had two of them text me this morning. Very happy traders out there today.
Mm-hmm. And then Bitcoin, and Mark, I'll have you read Bitcoin for me if you can.
I mean, listen, ever since that gap up the other day, you know, whenever you get a gap up situation, anyone who has traded earnings, and I'm not talking about 2020, previous to 2020, you dealt with a lot of gaps, both up and down. We didn't have as many gaps down on earnings in 2020 because of the unique situation of 2020. But gapping patterns are very unique. Yeah, they can go a lot of different ways. One of the things you do is you look for that intraday support and resistance that forms in those first few days. Obviously, we're really early into this pattern. Sometimes gaps fill and come down to that old breakout point. There's a lot of different ways. And so you're going to have a lot of volatility. You can have a lot of strangeness as Bitcoin finds its technical footing. Now, technically, Bitcoin has been very well behaved in this run up, very well behaved. So it wouldn't surprise me if some standard, normal, technical pattern forms in the coming weeks. The next signal on Bitcoin will come off that pattern. But a lot of people avoid gaps. They just avoid gaps on new entries because they can go a lot of different directions. There's a lot of variables at play here. So Bitcoin will eventually develop a pattern here, but we're in a gapping pattern right now. It can go a lot of different ways.
And I want to bring something up here today because I do think it's important. Cody, can you bring up finviz.com for me? Finviz.com, because there's no way to chart what I want to show in Thinkorswim. So we're going to go to finviz.com.
Just a second. I got to change my share settings.
Oh, no worries. Ripple, which we talked about last week.
All right, here we go. How do you want me to look this up?
Finviz.com. And then at
I'm
the
at
top,
Finviz.
you'll
Are you
find,
not seeing
we don't
Finviz?
see it. Nope, we don't. There it's coming. Might just be a little delay there, Cody.
All right, Finviz.
At the top where it says crypto, see the menu left and right?
Yep. Oh my God,
And
these ads.
oh, ads are the Finviz annoyance. I get it. Click charts there, in the sub menu where it says quotes performance charts. You'll find charts for all the different cross pairs and the majors in cryptocurrency, Bitcoin, Litecoin, Ethereum. Look at the run. The left is what you want because the different columns are which other currency they're crossed against. So Bitcoin USD, Litecoin USD, Ethereum USD. Bitcoin's had the run we've all been talking about. Litecoin has been correlated to it very specifically. Ethereum has been taken off like a juggernaut the last week, also correlated to Bitcoin's move. Look at XRP down here, Mark. It's actually flat today and it's taken it on the chin. And it was even down as much as like 20, 30% yesterday on news that a couple of different exchanges, Coinbase, one of the biggest, most popular names in cryptocurrency, stopped trading in the currency. They halted it until the SEC investigation works its way through. So just kind of an update on what we talked about last week, which I thought was very, very interesting. As a crypto nerd, I'm still thinking about how the Ripple thing works. But Mark, one very, very big difference between Ripple and Bitcoin is Ripple has a corporate headquarters, Bitcoin does not. The SEC is going after Ripple, and you see Ripple's chart is responding. The other cryptos are still chugging along and tracking forward. So if you're out there, you're a crypto person, you read the news about Ripple today being delisted. If you're a Coinbase user, just have some context. In the short term right now, it is affecting Ripple's price. It's not currently affecting Bitcoin's price. Mark, anything you thinking you want to add to
No,
this?
I mean, the only one I follow, I've been on the Bitcoin position trading bandwagon in this run up. I don't trade any of the other crypto, so I don't have anything intelligent to add to it.
It's just interesting news. And until we see how this whole thing shakes out with Ripple, obviously, in my personal opinion, it's completely stay away on Ripple until you get clarity on it. It's been taking it on the chin while every other cryptocurrency has been running. So back on the charts, Bitcoin still's got a nice little flag developing. By the way, on that, if you scroll up just a little bit on that Bitcoin USD chart on Finviz, Cody, you might have already flashed past it. Just click on BTC USD. And you'll see what I was talking about, how it does not have a gap on this chart.
Yeah, because it ran over the weekend versus the futures chart on the S&P, or not the S&P, on the market software.
So on continuous pricing, when you have all those pricing from the candlesticks in there, it's actually just a nice little bull flag that is starting to develop up here at a high point. So still interesting. Doji on Bitcoin, interesting news on Ripple. Let's move on. Back on the charts here for Bit, guys. And by the way, we're going to move into some stock talk today. One thing the team wanted to talk about today was the concept of profit taking. And so some of the segments we're going to go through here in a bit. I know Mark has some ideas, Emily has some ideas, and so does Cody around the concept of profit taking. And I think in a market like this that's hesitating at a high point, perfect kind of concept right now. Mark, why do you think this topic is relevant for the team out there, for anybody listening?
Listen, profit take, because the thing I hate most in life, in trading, both as an individual and as a coach, as a teacher, as an instructor, is FOMO. I hate irrationality in human thought. I hate greed. Insatiable greed. Eventually, the market's going to get you. Eventually, I mean, you go to all these message boards these days, and people talking about, some case of somebody making 100 billion%. That will always be the case. Somebody will always be making a lot of money out there. But what it does is it inspires everyone to want to make a ton of money at all times. I'm a huge believer. Hey, grow your money. Listen, stock market and trading is your road to get to where you want to be. You just don't have to get there this week. And so being responsible, logical, rational in our decision making goes a long, long, long way. And if we give up that rationality and logic, and then we dive into FOMO and fear of missing out and just have that greed monster take over, well, it can make you make some really questionable decisions. And so I think talking about profit taking in a logical, not in a scared way, we don't take profit because, oh, we're up 2%. I got to lock in those gains. That's a different kind of emotion we got to battle. I'm talking about taking profit in logical, rational means. After huge percentage moves, after you've hit your logical target, I think it is a reminder, because there is so much greed out there. Greed fear index, call put ratio. The greed is just overwhelming individuals. And I think it's just worth a few minutes just to talk about battling that greed and doing so in a logical way, in a way that you can rinse and repeat this month, next month, and in the coming years. We all want to make money, and we want to make as money as fast as we can. And trading can be a good vehicle for that. Mm-hmm. But we want to do it in a logical way, where probability and the odds are always on our side. So,
and what we've done here, guys, you know, when we were planning the show here today, we're going through the news, we're looking at it. There's not a lot going on. There's the update on stimulus, the technicals on the market are what they are. And then this is just naturally where the coach's mind was. You know, Cody, you were in the lounge this morning, talking with some of our students about profit taking on some different candidates. And I know everybody, and we'll go through them in a second, Cody. I got 3 news items I want to go through first, but everybody's got a couple examples here. I know Emily has 1 or 2, Cody has 1, Mark has 1 or 2 as well. So we'll go through those examples and have a discussion about the nature of profit taking and what you should be thinking about. But 3 quick news items from companies. First, number 1, Boeing, BA. American Airlines flew the 737 MAX jet for the first time since it was decommissioned out of service there after the tragedies that happened a couple of years ago, where Boeing outright lied to the American people and the world and whatnot about what they knew about those airlines. And now, after all this process, 2 years, Emily, they're finally flying the plane again. It doesn't take Boeing out of the woods. Mark, do you have any interest in Boeing next year, by the way? Is this a company you'll be watching? Or?
No, listen, I sold some puts back when it was really cheap, and I sold them at even lower levels. I had some fun with it, but I am not chasing Boeing at higher prices. I mean, if Boeing were to crash in price again and come back down, I'd relook at it. Not a chance I'm chasing this one. Too many other things I like a lot better.
Yeah, SAP, which is a huge German business software company, one of the juggernauts globally, they actually announced that their Qualtrics unit is going to go public. They actually just bought that unit, I believe, and invested in it a couple of years ago, 2 years ago. And the shares obviously have recovered after that tragic earnings report a couple of months ago. And then one more news item I want to talk about was Lemonade, LMND. And Mark, this was a very popular IPO when it started coming out. It had a little bit of juice after a couple of months starting to run here. Lemonade, actually, this is the lockout period. Oh, a little juice. Yeah. It was not intended, actually. Actually, no, not intended. It might be getting sour here pretty soon, though, by the way, Cody. That was intended because they're now approaching their lockout period where insiders can start to sell after, all of this anticipation. You just got to be aware of these events if you're ever playing these kind of momentum plays. Mark, any thoughts on LMND, the way that people are approaching some of these momentum IPOs?
No, I mean, once again, on the momentum, I mean, it plays right in. Like, so many of these stocks have had a great December, like some massive runs. Like, like, you think the stocks are going to go up 80% every month, 40% every month? I mean, every once in a while that happens, right? But this is where I think, it's greed. Is like, after you have massive runs and you have huge profits, at a minimum, man, maybe look at some protection to lock in some of those gains with a put or something. Like, do something to protect this huge win. At a minimum. You don't have to necessarily get out. There's a lot of ways to manage huge runners, and not all of them involve just selling your shares. But realize 2020 has taught a lot of bad lessons. And when you have massive wins, nothing wrong with, at a minimum, getting some protection on there.
Absolutely. And from a news perspective, that's all I had today. We're going to go through and we're going to talk profits now. And what I want to do here is I want to start with Cody. And Cody, you had an example with the biggest company in the world, one of the most popular ones to invest and trade in, that I think is an appropriate example here today. Now, what we do with this might come down to some discussion or some debate, quite frankly, because there's not just one answer.
Absolutely.
There's not just one answer. It's not that if it hits one target, you have to just sell everything and exit. That's always a choice. But let's have a conversation. We're going to start with Apple, then we're going to go to some of Mark and Emily's examples. But Cody, kind of explain your thinking here.
Definitely want to get to Apple. First, I just want to say, like, Mark's little monologue earlier was beautiful, and I think that we need to cut that and put it itself. It is that I thought that was really good. The only thing I wanted to add to it is just he kept saying systematically take profit, and that's the idea of moving from potential profit to real profit. You can see a green number on the screen, but you did not make that money until you close the trade, and that's the overall idea of profit taking. I don't care what the number is on the screen. If you don't lock that in, it does not exist. You have to close the trade at the proper time, like Mark explained, in order to take that profit. With that, go into the Apple example. So this morning in the lounge, had a student ask where I would move my stop in this trade. And I asked the student informed me that they got in on the breakout right here, 12:15, which was the perfect technical breakout seen from this pattern. So they got in at the optimal time. And I asked them where they were targeting, and they said they were targeting the previous high. And got into the perfect time, targeted the previous high, and they asked me what I do with my stop. So my advice was I would literally move the stop to today's low, to where if this thing comes back any further, you get stopped out. But the real answer is you got in at the perfect time, it ran up to your target, you take some profit. You don't have to close the whole trade. Maybe you want, estimate it continue to run. But it hit your target. Let's turn some of that potential profit into real profit. And that's what I went over this morning in the lounge. I think I spent a good 15 minutes on that one. I want to get some of the other coaches here's opinions on that piece of advice that I gave.
Well, there's a couple things. Number one, I would not fault somebody on a Tuesday in a light holiday week if they put a trade on and they were thinking swing trade on Apple. If you entered on the breakout thinking, you know what, this is on my watch list, I'm going to play it. I'm going to go long a call or a bull call spread or long equity or whatever version of long delta they wanted to play. It ran up and hit a natural target. And they said, you know what, I'm going to take that off because I want to lock a profit in on a light news week. I would understand the logic behind it. I would also ask them though, what is your system rule? Like, are you going to do this all the time? Every time you hit T1, are you going to take it off? Is this T1 or is it T2? And what I mean by T1 and T2, if you're out there, if you've never taken the step system, the way that we teach directional trading, it requires two profit targets. Okay. And one of them is a shorter term profit target that you then evaluate and you apply your rules to. The other one would be a longer term profit target that you're going to work towards if you feel like the trade still has probability behind it, it's smoothly working, all that kind of stuff. I'm looking at this one and I'm a momentum trader. And I probably have a different take than Mark does. Well, I'd love to hear Mark's take. I'm of the mindset in general, especially with momentum, if you're going to play them, to let your profits run and cut your losses short. I'm aware of the red candle. And Cody, to me, if I'm aware of the red candle, but I still want to have the ability to let a profit run, I might do one of two things, maybe one of three things. I would roll a stop loss up. So I'm protecting.
Yep. And that was the first answer, is move your stop loss up.
So just stop loss management. Based on my rules, I would stop loss up to protect some of the profit against my exit. I could partially exit. There's nothing wrong with what we call scaling out, where if you have 100 shares, Emily, maybe you sell 50 of them and let the other 50 run with a trail stop towards target 2. And in fact, I mean, if you look at your trade journal, and this decision shouldn't be made in a vacuum. I know every now and then we have these one-off decisions we just have to make based on the information we have at the time. But the decision should really be made based on your rules that you've designed from taking courses in education and instruction that you'll consistently apply over time. So I don't think people should be out there just willy-nillying this and just kind of just on the fly, on the seat of their pants, deciding what to do with their trades. So that's one bit of education on that. The third thing I might do, Cody, is convert it into something else, okay? And those conversion trades are very popular among our pro members. I know Emily loves doing that. A very simple conversion trade would be if you had a long call on the breakout to turn it into a bull call spread. Or if you had shares on the breakout, you could either sell a call, turn it into a covered call, or you could buy a put option, turn it into a caller. I'm not going to go through the detail of that right now. That's where the playbook comes in, and that's where our pro membership comes in, and the lounges and the shows and all that stuff. But those are some thoughts I had around it. What about you, Emily? I mean, how would you approach profit taking on a stock like Apple that has run up to this high?
Well, it's same answers as you guys. First of all, you look at where you're going to find resistance, and obviously we have that previous high, so that you know off the top of your head that it's going to slow momentum there before it either retraces back or creates a high base and continues on the uptrend. So you have to have that process and make a decision as to what are you going to do when it gets to that resistance level. Are you going to lock in some profit? Are you going to move your stop up, or can you just take your profit and then let the trade reset and then enter it again when it breaks that new high again? So you have to have those levels of what you're going to do. That way, when it happens, you've already made the decision and you're not trying to figure it out on the fly. So for me with Apple, first of all, I love Apple. So for me, what I would do is obviously if it's a directional play, if I just had a straight long call, I would definitely sell a call and try to bring in the premium that I paid for the long call, so that now I'm in it for nothing. And or if I had multiple calls, I would at least take profit on one and then leave the other one up and move my stop loss.
Marky, what are your thoughts on this whole topic?
Well, it's something that Tim said, and this is what I preach whenever I'm talking to someone about directional trading, is consistency is king. It really, really is, because if you're trading for 5, 10, 20 years, the rest of your life, right, you are going to be faced with a similar situation a lot, thousands and thousands and thousands of times, where you're in a trade, you play a breakout, you catch the momentum, and you're up at target one, target two. So you're going to be in this situation a lot. There's my cat just loving life there, using me as a gymnastic springboard.
She was hanging out behind you while you were talking.
And then so I love that little thing. And so like what you don't want to do is do one thing one time, another thing another time, another thing another time, and then just going back and forth. It's not mentally healthy to do that. You're expending too much energy. Now, if you're brand new at trading, I understand you might not get your perfect way at first, and so you have to experiment with a few things. But I'd really spend some time being like, and trying something out several times in a row, the same thing, to get a feel if it's part of your personality. Now, me personally, I am a big fan. So you have target one, which is a logical target here in Apple. Really logical target, right? Old previous pivot point, classic target. You expect a little bit of selling at the start. Doesn't mean it's going to hold there, right? Could go up further, but I am a big fan of doing something to lock in partial profits in some manner or another. And so I'm a big fan of something, and maybe that, and I'm not a big move the stop loss kind of guy. If I owned equity, I might buy a put if I was doing it for a position trade to lock up part of the gains and still give myself to run. I'm a big fan of selling calls in this situation on position trades. You move it up, you sell a call, natural resistance point, and if it keeps going, hey, you made even more money, you're happy with that. Scaling out of part of the position, right? Let's say I had 200 shares or 2 option contracts. Taking one off, locking in the profit, letting the other one run to potentially hit target 2. You want to find some balance here in this situation, because those big winners make a big difference at the end of the year. And so you want to find some balance that locks in the money from the expected run, but still gives you a little bit more, something that works for you. And everybody's going to be a little bit more aggressive, a little more defensive, a little bit more prone to take profits, a little more prone to let it run on your personality. But come up with a system that you can rinse and repeat every time that you're in this situation, because you're going to be in this situation a lot, and it will save you a lot of mental grief over the years, and it will make you more profitable. You're never going to have the perfect system that works every time in every circumstance. I mean, that's just not going to happen. But find something that works for you, and you'll be really, really happy with the results, whatever they are.
Love it.
Love it.
What are some of the other examples you wanted to run through, Tim?
Well, there's a couple actually. Bring up. Went back and looked. Emily brought up a stock ED, I believe.
No, it was DD.
DD, DuPont, sorry.
ED.
DD,
Gotcha.
DuPont, yeah. And Emily, this one was on the report a couple of 3 or 4 weeks ago, I believe on 12/2. And you just thought this was a good example of where, you know what, it just hit a high point. You could easily probably have taken profit already on this one. Is that right?
Yep, same scenario as Apple. And if you go back on a weekly time frame, you'll see those previous resistance levels right at that 73. So it didn't quite get to that resistance level. It kind of found a resistance level there at 70 and 71. So sometimes it's not always going to go and get to where your target might have been. And that's, again, you have to make that decision and say, okay, if it doesn't get to my target and it's not to be traced back down, what do I do? Do you, move your stop up? Do you take some profit off? Whatnot, but you have to have those plans in place. But DD was a quick, swing trade. We had confirmation on, I think it was on the December 12th stock report. So you might have gotten triggered in that Monday, and then you saw a little bit of a sell-off that very same day, and you stayed through. It had, hit that high at 71.30 or something like that. And then you see a couple of doji candles there, and then it's starting to sell off, and now it's sitting below the 9. So if you are in this, you should have at some point, taken profit or moved your stop loss so that you don't give back everything that you just, you made, when you're into the trade.
Mm-hmm, mm-hmm. Yeah, and I think that's a really good example, especially on multiple time frame analysis, where you hit a recent location that's going to serve as a natural profit taking point. I had a couple other ones, Cody. Look at INFY.
See here, INFY.
And here's an example where you've got a couple of things going on. This was on our report on 12/5 on the options report. And, I went back and looked at it. INFY. It naturally has run up over time. You can see it. If you panicked on any one red candle, you would have missed the trend. Now think about this. Like, look at from where we could have potentially entered on that breakout, any of those different locations as the trend was developing in here. Nice little breakout location around that 1550. But not all trade management requires micromanagement. In fact, micromanaging all the time is a mistake, in my opinion. And if you look at this, yeah, you're going to have a candle or two within the context of the trend as it's moving up, but that doesn't mean you do nothing, right? When you're up here at this kind of location mark, $17, made a couple of bucks on a small stock, you could do a lot of things. You could just take the profit. You could roll stop loss, but you also got to be aware, look at that earnings report coming up. This is why it's so important as you're planning your trades. Like what I do on, say, INFY might be very different than what I do on a different stock if I'm got clear sailing throughout the month of January with no earnings or no other factors involved. So I just thought that was an example of what was a good one. Autodesk, ADSK, kind of same thing. Taking appropriate actions at appropriate locations based on your trading plan is there. After a nice run, and we've had this one on our radar now for about a month, 12/5 was the first time we had it on our report, had a nice breakout off the W pattern, post earnings, had a good earnings report. Now it started to move here. And if you can see it, I mean, we've run from 270 to 307, healthy target 1, target 2 type of mechanics. Now there's two different points in the trend that if you just got out, you would have had a small profit. There was a big red candle mid-December that did not violate support. Some traders might have done something there, and there could have been appropriate things to do based on your rules. But if you roll stop loss, manage it that way, it keeps running, you're up here at your target 2, you get to these locations, and it's just, if you're a veteran trader, you know this, you get to spots on the chart where you got to do something. What that something is will be dependent on the trader, depending on their mechanics, depending on their level of understanding of how adjustments work and all that kind of stuff. But now we've hesitated. Now, Mark, it doesn't mean that Autodesk can't hesitate, consolidate, break out, and take another run. And at the end of the year, if you're a directional trader, making the bigger gains is important. But when you do see chart hesitation, it requires traders to come in and at least analyze it to see if there's an adjustment to make. Anything to add to that, Marky?
No, I mean, here's the thing. Like, when you get that hesitation pattern, I mean, what a lot of people, and this is not unique to me teaching it, is like you get that big profit. Listen, you can get out and then re-enter on the next breakout.
Yes.
That's the thing. You got to remember, and you got to make this a mantra of you. Like, who are you? Are you an investor? Are you a buy and hold? Are you one of these millennials that like, hey, it all goes to the moon? Or do you want to be a market assassin, a trader? We are not buy and hold investors. We are not these 19-year-olds on message boards that say, Nicola only goes up. And pound the buy button, smash the buy button and just endlessly just have zero brains and just all testosterone running through our bodies. So that's not who we are. We are tactical. We use our knowledge of charts to make decisions. Yes, I'm a perpetual bull. I only do bullish trades. I do believe that this whole market will continue to go up, but we want to maximize our decision-making process through our knowledge. And when there are logical places where stocks hesitate after a big run, guess what? That is absolutely normal. You can always re-enter if it breaks out. Take your profits, let the setup, or you might find a better setup somewhere else. You're not a buy and hold. You're not a millennial. Don't be those people. Be a tactician. Be a market assassin. Use your knowledge of charting to help make your decisions. Get in and out. You're a trader. You're not a buy and holder.
Well, and then the other thing I will say here real quick, Cody, is that based on what type of stock you're trading, it increases the degree of difficulty of this execution. And you got to understand that there's a natural relationship between reward and risk. And like the DD trade, DuPont, it's not Tesla, so DD might casually move up there, Emily, and you got a little bit more time and patience to kind of work through your thought process, right? But if you're trading some of these underbelly stocks, Mark, that you like to call them, then your degree of difficulty goes up quite a bit. And you got to understand it out there. If you're a trader, you've got to make decisions about how you're approaching your watch list. One of the most prudent things that anybody can do is trade the biggest, most liquid stocks that everybody else trades. Dance where the other people are dancing, dance where other people are on the dance floor, Emily, go party in there. Like Apple Computer, like the first example we had. But if you are going to trade some of the more big momentum type plays that are grabbing the attention of the market, you're adding risk to it. And Mark, I know you had some examples of this, right?
Well, I mean, it's just, and I could pull up a billion examples. Like, and this is where the insatiable greed. Let's pull up Fubu. Now, Fubu, stock I actually follow on a daily basis. I actually love this little company.
Is it FUBU?
FUBO.
Oh.
And you gotta redo it all again.
Yeah,
Tosh does that all the time. They can provide some nice technical setups. So let's go to that technical little setup. Like, you had a little run up. There's been a couple nice breakouts along the way. Like, technical analysis still applies to the underbelly. Things move a lot faster. And so you had a nice consolidation pattern. You had a pretty clean break of that consolidation. And if you could like highlight into that without the last few days of action, Cody, so just like if we were just pretending we're there on that day. All right. So very common in these underbelly stocks on these names, you have these big runs up after breakouts, consolidation pattern. You see this all over the place because technical analysis is still technical analysis, whether you're a penny stock or Apple, just a lot more volatility on the former. All right, and so you got a potential resistance level. Now fast forward one day at a time.
By the way, I love this type of analysis, like where you can run back and look at what happened.
And so just pretend you're in this. And once again, this thing could be anything. Don't get hung up on the ticker symbol. I mean, it could be anything, right? So you have a breakout. Let's say you get in there around $30 on the breakout, right? All right. So whether it's Apple or Fubo or anything else, you're going to set natural targets. Like, what is the expected run? You're going to look back at past runs to see where it was. And you look at that last run and how much was that? About 15. How much was it, Cody?
let's see, it ran from around $15 to $30. So it was about
So we got about
run.
a $15 run. So we know this thing can run, right? And we know that we're gambling, we're dancing with the devil. This isn't Apple, this isn't Intel, this isn't Coca-Cola. We understand we're playing a momentum stock that can move a lot. And so we're taking on additional risk, but we know it can run a good stretch. And so a natural place to take targets. What was the entire run? It was about $15. All right.
Yep.
Fast forward another day. All right. It's like, oh my gosh, things are going great. Fast forward another day. You know, we're like, we're the greatest trader in the world. All right. We smashed that target, right? This is where my lesson to my kids would be right now. It's like, all right, you got lucky. All right. Now you were tactical. You played a breakout level. You were playing these momentum stocks. And right now you're like, well, this thing's going to go to 100. Oh my gosh. The amount of message boards I hear on every one of these type of stocks that say this thing's going to go to 100 in 2021. Shut up. Seriously. I'm just so tired of your infidel. And I never root against anyone. I start to root against these people because it's like your greed based on what? Give me some analysis. All right. Anyways, back to the trade. So we're in a great trade. You have made a ton of money like that. All right. Like that. You've made a ton of money. This is the problem in 2020 with so many traders. They make quick money and then they're like, I got to make even more. They go from a smart decision. If you were to play that breakout, they hit their target in 3 days. What do you expect this to do? Go to 107 days? But that's what the stupid human mind starts to get. I just made this much money. I'm going to make this much more. Fast forward another day. All right. Oh my gosh. Oh my gosh. You're going to be a billionaire. You're the smartest, best trader in the world. But this is where greed kills you. Now let's fast forward a couple more days. If you are not locking in profit, taking profit in these momentum type stocks, and this could apply to a lot of different things, you get massive profits in a short amount of time. Listen, every once in a while, something just goes to the moon. Guess what? Most of the time, it's going to revert to the mean. That's just the way it is. Play the probability edge. When you get those great trades, do something to take profit, reduce risk, because it can go as quickly as it went. And there are, I mean, I could pull up so many examples like this right now.
Yeah. Well,
does that mean that FUBU one day won't be at $100? I don't know. Of course it does. There's no reason it might not be. It could also be at $15, right? I don't know these things, but I do know that smart decisions on the chart is what you want to be. And when you get these huge gains in short amount of time in some of these momentum plays, realize it's not going to end. I mean, it feels like at the time that it's going to go to $1 billion.
mm-hmm.
Make consistent, logical decisions time after time. And I promise you'll be happy in the long run.
Love it.
Yeah.
Love it. Perfect. I mean, yeah, take some profit as you hit your target. Take some. Don't close the entire trade. Do something though. Lock it in. Do something to turn the potential profit into real profit. And then if it keeps going, great, you're a genius. You may not make as much. That's okay. But you're playing a system and you're not gambling. We're not gamblers. We're traders.
Because guess what? There will be another momentum breakout play somewhere right around the corner. Might not be on FUBU, but it will be somewhere else. Lock your profit. Go look for that setup.
Mm-hmm.
There you go.
And it's very, and by the way, I love that breakdown there, Mark. That was awesome. You know, it's very difficult in any trade, whether it's Apple, whether it's the S&P, whether it's FUBO or whatever stock it is. It's very difficult to pinpoint and get every penny out of a transaction. That's almost impossible. You shouldn't even set that as your expectation.
In fact, I had a coaching session last night. And the first thing I did, Tim, last night was we talked about, listen, we were evaluating the month, right?
Mm-hmm.
You are, and we're at that time, you know, where I look back and I'm like, how did I do this month? Right. You know what? I mean, I got a couple trading sessions left, so the book's not quite closed, but I'm like, how did I do? You will always have perfect hindsight at the end of the month, looking back. There's always more money you could have made, right? With perfect, because and every month, guess what? At the end of every month, you're going to have perfect hindsight where you look back and like, if had I done this and this and this, screw that. Look at the end result. Be happy with it. Learn from whatever you learned to apply the next month. You're never going to get to the penny, right, of the profit.
Mm-hmm. No, you're not. It's not.
You
gonna
can't
happen.
do that.
No.
You know, you got to let go of that dream.
Well, and then the other thing that can happen as well, and it can happen on any stock in any transaction. It's happened to every one of us, and I know it. I don't need confessions to Father Stoccaducci. I already know this one, Emily. I know traders well enough. Is if you fail to take action with your rules when you're supposed to, it runs the risk of spinning into extra emotion that you don't need. Because then all of a sudden you're watching a trade that you had a bunch of money on, that you had profit on, that you could have adjusted stop loss, could have locked it in. It didn't happen. And then boom, now you're sitting here thinking, well, should I hold through the retracement now? Should I turn it into a position trade? Should I just invest in the company? Right? You've got all these different emotions that start to creep into your head when if you just would have executed based on your rules, you could have removed your emotions, right?
Absolutely. It feels like a mentorship session with you right now, Tim. This is how I used to be. So.
Right. I got you, kiddo. And by the way, that's the whole point of having other traders around to kind of, make sure that we're all thinking through these types of problems. And I love the comment from Guy. Guy, thank you very much. Good breakdown of the most difficult part of trading. I think trade management is the hardest part, but that's why rules are so important. Try to remove some of the emotions.
That trade management is in the heart. I think profit taking is the hardest part
Profit taking
of trading.
No,
I
I
really
think
do.
I agree with Mark. Taking that profit is the hardest part, and it's crazy to think that you're winning.
It is by far my hardest part.
Why is it
for me.
hard to close a trade that you're winning? It's because we're afraid that if we close it now, it's going to keep going without me, and we watch many winners turn into losers.
We become emotionally attached, right?
We do.
Mhm.
It becomes our darling. It's like, oh, I love this. You're making me money, and our darling just turns on us in a heartbeat.
Psychologically, there are companies like Cinemark, right? I've been selling naked puts on Cinemark since the pandemic. I don't even know if it's a good play anymore. I just know it works, and I love that little company.
What's Cinemark, CMK?
Because you become emotionally attached to winning positions. You become emotionally attached to companies that treat you well, right? They take you out on dates, they buy you dinner, they bring you flowers, they say nice things, they walk you to your door. I mean, you become emotionally attached. They treat you well. You want to keep dating them, right?
Mhm.
The psychological elements of trading are fascinating.
I agree.
Tim, what was the example you had given? My brain's slipping.
Oh, well, we were talking Apple. We were talking different candidates. I don't know, based on profit taking.
No, there was one chart I wanted to add a comment to before we sign off on this entirely.
Palantir, PLTR.
PLTR, was that it? Maybe.
Oh, my baby, Palantir.
No, Palantir is doing well. So it wasn't Dow DuPont. I think it was after Dow DuPont. What was one of the other examples?
Palantir, please come down into the mid-teens. That's all I ask in the month of January.
The example from earlier, Cody. Yeah, Autodesk, ADSK.
Yeah, that's it there. All right. So the one I want to add to this, and this is why you should also have these levels that you take your profit. If you're holding this straight stock, you don't care as much, but most of our students are not just doing straight stock trades. They're doing things like a call option, right? And when you look at this, even in hindsight, you say, yes, but if I would have taken profit, it's now a high base. Well, 5 days ago, we didn't know that it was going to be a high base. 5 days ago, it could have been a retracement. And you know what 5 days does to a call? 5 days erodes a call. And then you start thinking like, well, I was just up, let's say $200, and now I'm only up 150. Well, I don't want to close at 150. I want to close at 200. And you sit there and you emotionally allow this base to erode away your profit when the simple answer was right there, close that trade. If you're doing any type of long call where you have negative theta, hesitation can destroy your profits, because every day that you hesitate, the market is going to erode away a little bit more and a little bit more. So I just want to add that because I love these two high bases on this, but this would be a long call nightmare if you did not take profit properly. Even though the overall trend is up, if you held a long call from here all the way till here, you're probably at break even.
No, you'd have profit. Too much delta move, but the point is there. You would still have profit, but
it wouldn't be of what it should have been had you taken your profit at the proper time.
Correct.
Do not let theta erode away your profit.
Correct. It's a good point. I mean, straight delta plays that have theta and vega implications Yeah, they have more sensitivity to them as well. So I think it's a good point. Yep. Last couple things I want to do here today, guys. Been a really fun show. I've enjoyed it. I hope you guys out there have as well. If you're still watching our show, thanks for joining us on a holiday week. I know that, I love coming in here, hanging out, looking at markets. I got to call the Fish and Game, figure out what kind of animals have been roaming my yard here after the show. So I got to go in a minute. But actually, a lot of consensus, by the way, from my friends on Facebook, that they have no idea what it is. So debate is.
That's gotta be, come on, man. Like what
I
is,
have
listen,
I have
you're a
hunting
trader.
friends.
What are the probabilities? Somebody saw a mountain lion. You got those big ass claw marks in your yard. What
That's
do you think
true.
caused,
But I have subject matter experts that have been hunting deer and mountain lions their whole life from here in Utah that are telling me it's a dog.
They sound like the mainstream financial media to me, man. You need to trust your gut on this one, man.
I
There's
know.
a mountain lion a few blocks away, and you got those big, like,
I
let's
know,
just keep
I
the kids
know.
and the dogs in the house.
There's an ongoing debate, and that will happen. There's not a debate about that. That will happen until we figure it out. But let's talk a couple of charts. By the way, I'm getting these charts from our Twitter account. Coach Frank on Twitter does a fantastic job. If you use the social media app Twitter, make sure you follow Tackle Trading. Couple of charts, Mark, I want to go through and get your take on here. Walmart.
Oh, no. I mean, listen, I thought I was done with my own personal trading, and now here I got Frank's charts.
Frank's
Gosh, dang
charts.
it.
Now, he specifically brought this one up for a weekly chart. Daily charts, obviously, we're looking at it here. It doesn't look like there's much there. But he says weekly chart on Walmart for this retracement.
Ooh.
Mark, what are you seeing here?
I pull up well, you're sitting on the 20 weekly like a champ, right? Like 20 weekly is the most underrated indicator in the world of indicators. You put that on a weekly time frame.
Yeah.
Mm-hmm.
And once again, I mean, like on a champ. And when I analyze these situations, the last 2 weeks has came down to the 20 weekly. It has stopped on almost the penny. Now, one aside from the fact that, oh my gosh, algos actually are involved and moving averages work, there's that lesson. But when it stops to almost a penny, it shows me there's no fear, right? It's no fear. Now, because Walmart is not a swing trading instrument for me, because it is a position trading instrument to me, I got some time to be patient here. I don't have to go out and like catch the perfect bottom here, but I do have a developing pattern. So in this specific situation, and this is one of my favorite position trading entries, points on a stock that I like, come down to a moving average, a major moving average. I want it to hold there for a little bit. I want it to make sure that I'm not catching a falling knife, make sure that there's not just some volatility. Really think Walmart's going to blow it out on Christmas season. Love Walmart here, but I also am not, once again, I'm a market assassin. I have opinions, but I'm always going to go to technicals to help me make my decisions, help me specify the timing. And so when I get one of these deeper pullbacks, I get really excited from a position trading. This is my stuff. Mark likes a pullback, right? Hates a breakout, loves a pullback. But I want to be patient here. I want to give it a few days, let it hang out there, give me a bottoming pattern of some sort, and I'll go back to the daily chart. And then after I make sure that the bears have had a few chances to win, after I've had the few chances to win and I get some stability, then I'm going to play an upward movement signal. And that can come in a lot of different fashions. Clear the 20 weekly daily moving average, clear the short-term consolidation. But usually you have a little bit of time here. Love the pattern. Just want to give it a few more times. I'm definitely putting that on my to-do watch list. Just give it a little bit of time before you get into this one.
Mm-hmm, mm-hmm. And then one more, Expeditors, EXPD. Frank says challenging resistance. Cody?
High base breakouts. I like it. After tried it a couple times, I mean, you can even see that. I mean, this is almost a ascending wedge pattern where you can tell that it just, yeah, I like this chart. This is a clean chart, and the target on this one is very obvious and very easy. If you're buying a breakout of 96, what are you targeting? T1, easy. $100, easy.
Yeah,
right there.
100.
Like you buy a breakout of 96, you target 100.
It's pretty clean.
That's an easy chart to play. And you know what? If this happens, and come next week, I have traders saying, "Hey, I held on to EXPD. What do I do?" I'm gonna ask one simple question: why don't you take profit at $100?
Mm-hmm.
Because I'm gonna buy this at probably 96.10, and I'm gonna sell it 100.
Mm-hmm.
Done. It's not much harder than that. Don't make something more difficult. And I talked about this a lot on the lounge this morning. I really should get better at hitting that record button, but I had a few different questions asking me, some of our students wanting to correct or manage some of their failing trades. And the lesson I went over in the lounge, and I'll say it here because it's so important. The easiest way to fix a failing trade is to close the trade and get out. You don't need to do fancy options and try to convert the trade and do all. The easiest way to stop a failing trade is to exit the trade. Period. So with trading, don't make trading difficult. Take the easy trades. Buy above 96, close at 100. Don't wait until the trade is going against you or something's going wrong before you try to fix it. Have your plan, trade your plan, and that's all I have. I'll even put that as my final thoughts.
Mm-hmm.
Don't make trading difficult. Trading is easy. If you trade your plan, trading is easy. There should be nothing difficult about it. The emotions are when we destroy our plans and then it starts getting difficult. If you follow your plan, trading is easy.
Can be. But even when you feel like it's easy, eventually it feels difficult for at least a moment, Emily. All of us go through that. So there's those patches, Cody, where the emotions get pulled in, right? That's why the rules are so important. I think the lesson you're trying to talk about here is very, very good. Emily, let's start moving into final thoughts here. Just a little gift there for you, Emily. A couple of charts from Coach Frank, at the end of the show. I knew you would love that. So a couple of ones to look at, take a peek at, add them to your watch list. And there's some really good ones still setting up on the options report, by the way. I'm laser focused on Lyft right now. LYFT. So guys, go back and review those options report picks because even though it is a light holiday week, there are setups if you're looking for them. Emily, you were on our podcast yesterday making our 2021 predictions. That was such a fun show. I just dropped the link in the chat over here for the team. If you've not listened to it yet, download the podcast. In fact, Cody, while we do final thoughts, maybe bring up tradingjustice.com and let's talk a little bit about that. Emily, final thoughts from you, as well as any thoughts around the podcast yesterday.
The podcast was so much fun. It was my first prediction podcast. So of course I had a lot of fun. So I can't wait to see, what our predictions are, a year from now. We had really a great time. So definitely take a listen to the podcast. But final thoughts, we've got today's the 29th, few more days left in 2020. I'm still on, family mode, just reflecting and just being thankful and all that good stuff. So that's kind of like where my headspace is at. Just, overall thankful for this community, for the people that we've met online. And I can't wait for, stuff to reopen and we can actually start to see each other again, So I'm looking forward to the vaccine working, and hopefully everybody's just healthy and just good and just has a better 2021.
I love it. You're jonesing for a party.
Yes.
You are. Yeah. New Year's Eve coming up. Maybe we can do a Zoom party, get together, crack some champagne, all that kind of stuff. But I think, we will have life the way we remember it at some point in our future. I believe that. Marky, you final thoughts from you, sir, as well as any thoughts about the podcast?
I just look forward to bringing home all of my rewards.
I will say this, brother, you went bold. I loved your analysis and I loved a lot of what you had to say there.
Listen, and it's hard because I'm a vain, arrogant individual that I've been trying to work on those aspects of my life in the last 10 years. So I am not nearly as obnoxious as I once was. But when small caps were down, I did want a scoreboard one day into the prediction podcast already. So,
so you
listen to the Trading Justice Prediction podcast to know what I'm talking about.
That's the thing about small caps, brother. They don't need a lot of time to either win or lose that bet. So that's a long.
Listen, I like talking crap more than I like winning. That's for sure. Which is why I'm wearing my Cowboys hat, Emily. And Emily, I have your song ready. If you come on the next time you're on the halftime report, I will sing you your song.
Just
Uh,
save it for next week, because then we'll be the division leaders, and you can even it'll be much sweeter than
Listen,
after we take the division.
my final thoughts, as they always are. Listen, I love these markets. They literally are my favorite markets ever. I really hope that the markets we have today and have had in 2020 never change. I love them. They're my favorite. I love the volatility in different areas. I love the stability in some of the bigger names. I love the cash flowing on the metals. I like where a lot of the materials are headed. I mean, I just love these markets. They're great. They're great. But guess what? We don't get to pick the markets we have. You never know what's ahead of us. That's why we're always responsible. We're always doing things in a responsible manner. We're not over leveraged. We don't have so many trades out that if something were to go wrong, we can't sleep at night the next night. Make money, be happy making money, but do it responsibly. And your future self, when many of the new traders in 2020 have given up on trading, your future self, while you're still plugging along, will thank you today.
Mm-hmm. Yeah, yeah. Wonderfully said out of everybody here. And my final thoughts are simple. I got to go figure out what kind of animal this thing was. I got to run. Wonderful, fun show here today, guys. Trade safe, trade smart. We'll be back tomorrow. By the way, we have programming throughout the week. A little bit at the end of the week, we'll have some adjustments, but we will have all of our regular reports out on the weekend, just like we always do. We've got tonight, we got a coach's show, 8:30 p.m. Eastern. Mark, and who is on the show tonight?
Miss Emily and Greg Holmes on the coach's show tonight.
Fantastic. Looking forward to that. And then obviously our Wednesday night, we've got a busy night there as well. We're going to be doing our cash flow club on Wednesday this week. And we've got our trade master series that Mark has been hosting and running for a couple weeks. That will be Wednesday night as well. And we'll also be back tomorrow for a halftime show. So everybody have a wonderful day. We'll see everybody very soon. If you're not yet a pro member, there's a 15-day trial link in the comments of every YouTube video. Come and join us on the back end, see what we're doing. I know that